United Airlines just dropped a bombshell on the market after they revealed that they're offering 2 sets of guidance. This is why investors should pay attention.
So management said, okay, here's 2 sets, right? Like you said, one's going to be for a stable environment. The other one's going to be for a recessionary environment. So the economy is stable, expects to earn $11.50 to $13.50 in 2025. If it's a recessionary environment, the company said they're going to earn between $7 and $9. So in other words, if United comes out and does not offer guidance and says we're pulling guidance, from an analyst perspective, and those analysts drive stock price, right, of what they believe that the estimates are going to be. And whether you make them or not, it's going to drive the stock price even further to see if you're growing or not. If they don't offer guidance, consensus earnings for 2025 from the analysts are going to be between $7 on the low end and $13.50 on the high end, which is freaking insane. So that means United Airlines could be trading anywhere from 9 times forward earnings to 5 times forward earnings. And that might seem like a very cheap stock to you, but airlines usually trade around 6-7 times earnings. Autos also trades single digits, so you can't really compare this to the S&P. The industry just trades like that. That's the way the industry is. So 9 times and 5 times. I mean, you're almost seeing a massive gap that's like, you know, trading 10 times or 20 times, right? You're seeing this massive gap where you're making this stock totally uninvestable if you pull guidance because you have no idea what's going to go. Now, by offering 2 sets of guidance based on non-recessionary environment, the stock's going to trade more in line with the economy, meaning I can invest in United now instead of not investing in it, not knowing and waiting until next quarter to see. Now I know this company's more about the economy. If the economy does good, these guys are really going to excel and kick ass. So what happened today? We had strong retail sales. If we see more data come out next month or next couple of weeks, right? Now you could say, okay, the economy doesn't look like it's falling into recession. United is a buy here. It allows investors to come in and buy the company based on the economy. It would have been tough to go into that name because you don't know where the earnings are because they pull guidance. You don't know how terrible it's going to be, if it's going to be good. By offering 2 sets, you're basically saying, listen, if Trump removes this tariff bullshit, we're going to do pretty well, okay? And if not, we're not going to do well. But here's the 2 outcomes, okay? It's going to be based, and they're pushing this saying it's going to be based on what the administration does. And I really love what they did here because it makes the company investable. And yeah, you could track the economy, you could track tariffs and say, okay, this company's going to get hurt because of it, instead of saying, I have no idea what's going on. I thought that was brilliant by them. I really thought it was a brilliant strategy.